Hi guys, welcome back to the Daily Forex. Today we're diving into a powerful strategy that can make a significant impact on your trading skills. I'm talking about the Boom 1000 and Crash 1000 money flow index strategy. So stick around as I break down the key components and steps to master this strategy. First things first, let's understand the money flow index. The MFI is an indicator that measures the strength and direction of money flowing into and out of an asset. It's an important tool for identifying potential trend, reversal, and overbought and oversold conditions. Setting up money flow index for boom and crash trading involves choosing the right parameters and time frames. You can experiment with different settings to find out what works best for you. I'm going to show the setup I use later on in the video. But first, let's understand the strength of this strategy. One of the strengths of this strategy is the ability to identify overbought and oversold conditions. When the MFI reaches extreme levels, it suggests a potential reversal in the market. I will show you how to spot these signals and interpret them effectively. But remember, no strategy is complete without proper risk management. I will discuss with you guys the ways to set a stop loss orders and take profits so you can stay disciplined and protect your trade capital. Alright, so let's get started with the practical steps. Let's start with Crash 1000 index and set our parameters for the money flow index, and we are using the RSI indicator as well for this strategy. We are using the RSI to set the positions for the money flow index. So let's go to the indicator section and select on the RSI, which is the relative strength index. So the RSI is going to be on indicator window 1, and if you are a beginner, the RSI means the relative strength index. Okay, so we're going to put the period on 14 right here, period 14, while we apply to close. Then we're going to add levels right here. We're going to put on 10 for the first level. Then we're going to add another level. I'm going to call this one level 90. Why we're going to put the style on 2 pixel. Okay, this long line right here is called the style and also the pixel. Why we're going to put the color on black. Okay, we're going to choose on black color right here. Then after that, we're going to put on the line. It's going to be the one with space, which is on the middle right here. Then we're going to click on done. Okay, after that, then the time frame should be on all time frames. Okay, on your MT5. Okay, because we're using MT5. And the style right here, we're going to put it on 2 pixel, which is on 2 pixel, and the line is going to be the one with this first one right here. Okay, the straight line pattern, and the color is going to be on white, the color of your screen. Okay, then after that, we're going to click on done. So these are the levels we're going to be using for the MFI, which is the money flow index. There is 90 and there is level 10. So now what we're going to do is to put on the MFI, which is the money flow index, on indicator window 1. I'm going to use the money flow index right here. I'm going to choose on that. I'm going to set the period right here to 14, period 14, while the volume is going to be tick. I'm going to put the volume to tick, not real, tick. Then the levels right here, I'm going to put on 20 and 80. Okay, level 20 right here. Then I'm going to add levels again. Okay, I'm going to choose on 80. Then after that, I'm going to put a style color on white. This color should be on white, the color of your screen, or you can use any color of your choice. Then after that, we're going to put a pixel on 1 pixel, while the pixel line should be the one on the middle right now. Okay, this one with space. All right, then after that, you click on done at the top right corner of your screen. You click on done. Then right here, the time frames should be on all time frames. Okay, it's going to be on all time frames on default. Then the style right here is going to be on 2 pixel. Okay, which is this one right here, 2 pixel, the straight, this line right here. Then I want to choose the color right here. We're going to put it on green, but you can use any color of your choice. Then after that, you click on this X button right here. Then you click on done at the top right corner of your screen. Then that should be it. Okay, so this is the indicator right here, the MFI. This green trend, this green line right here is the MFI, and these two levels, 90 and 10, are the RSI levels. Okay, we're going to be using for this strategy. So we're going to be taking 5 candle ticks at the overbought level and 5 candle ticks at the oversold. Okay, this is the oversold and this is the overbought. So we're going to be taking 5 at the oversold, 5 at the overbought. Okay, that's going to be 10 candlesticks profit total. Okay, so when the money flow index gets to the level of 90 right here, this is the level of 90, we wait for a spike to appear, and after the spike has appeared, it's a buy entry for a 5 candlesticks. Okay, so I'm going to take 5 candlesticks at this point. Right, you see right here, when the money flow index crosses or touches the level of 90 of the RSI, then you wait for a spike, because the spike always appear at the right side of the money flow index. So when the spike appears, you take 5 candlesticks from the market, then you exit after 5 candlesticks. That's the exit point. You exit after 5 candlesticks, but you can take below 5 candlesticks from the market for a proper risk management. Okay, so for example, right here, you bought the market at this point, okay, immediately after the spike, right? Then when you bought the market, you set your stop loss, then you set your take profit above. Okay, you analyze the market, then you set your take profit above 5 candlesticks. Okay, 5 candlesticks, then you set your stop loss below, so when the market crashes, your trade won't be too much affected. Okay, I take 5 candles because of how volatile the market is. So taking a buy before the spike, it will crash the trade. This means you will get caught up by the spike. All right, so the spike is going to appear if you enter the trade immediately when the money flow index crosses or touches the level of 90. All right, so you only wait after the spikes. Okay, so after the spike occur, the money flow index is going to be on the right side right here. Okay, the spike always appeared after it crosses at the right side of the money flow index. So after the spike, you take 5 candlesticks. After 5 candlesticks, you exit the market. So that's the exit point, okay, for a proper risk management. All right, because the market is highly volatile. You know, it goes to crash 1000 index, the market can crash, and when the market crashes against you, it's going to be a loss for that trade. Okay, that's why you have to wait for the spike to occur before you taking an entry. Okay, before you taking a buy entry position at the level of 90. Okay, so this is for crash 1000 index only at the top, right? Then at the level of 10, when the spike occurs, it's a buy entry, not a sell. Okay, it's a buy. So on the crash 1000 is a buy on the level of 90 and on the level of 10. So we're not taking any sell. Okay, there's no sell entry position, it's only in the buy. So we're taking a buy when the money flow index crosses below or touches the level of 10. So immediately it touches the level of 10, a spike is going to occur. So now we're taking 5 candlesticks when it touches immediately, not after. Okay, so on the level of 90, it's after the spike occurs on the right side. Okay, it's after the spike occur on the right side right here. Then here is going to be immediately it touches, a spike will occur immediately. Okay, so the spike will create the trend immediately, then you take 5 candlesticks of the market and then exit from that point. Okay, you set your stop loss and you set your take profit above. You calculate, you analyze the market. After 5 candlesticks, the trade will close automatically. All right, for the zoom level, we're using the 3rd zoom level. Okay, so right now you zoom out. Okay, this is the last zoom, right, which I consider the 1st zoom level. Okay, then the 2nd one right here, then the 3rd. Okay, so we're using the 3rd zoom level. Always zoom out first, then the 1st zoom is going to be the one you zoom out from. That's the 1st, then the 2nd, and this is the 3rd zoom level. Okay, so I think 10 candlesticks profits from the market. So the amount of profit you're going to make, it depends on your lot size. Okay, so the amount of profits you're going to make depends on your lot size. So if you're using a 0.2 lot, you'll probably be making about 0.10 from the market, which is about 10 cents from the market per 1 candlesticks. Okay, so it depends. Before entering into the market, always analyze your trade, you plan your trade, you calculate your lot size, your goal for that trade, the amount of profit you want to make for that day. Okay, you analyze the market, okay, the amount you are willing to put in for the trade. All right, you calculate your lot size, you analyze the trade, you plan your strategy, okay, the type of strategy you want to use for that particular trade. So you don't just enter into the market then deciding to, you know, just trade without proper analyzing, proper risk management technique. Okay, so for example, if you are trading just crash 1000 index, you can make profit with this type of strategy. Although you may think that it's a slow trade, but patience is the key. So you don't want to just rush into the market and make decision without planning. Okay. Another aspect of this strategy is risk management. You see, with good strategy that has proper risk management, you will enjoy your trade better. So this strategy using the MFI indicator is for crash 1000 index only. I'm going to show you guys how to make profit trading on boom 1000 index with one pattern of the MFI indicator on boom 1000 index. So let's go over to the boom 1000 index so I can show you how you can use the same strategy and indicator but only for one position. Okay, now I'm going to enter into the boom 1000 index and we're using the same setup. You can see the RSI and the MFI, which is the money flow index, with same levels of 90 right here and same level of 10 right here, as you can see. Okay, so you see we're still using the same third zoom level. Okay, so I'm going to zoom out real quick so that you can see that this is the first zoom. After you zoom out, this zoom is called zoom 1, okay, 2 and 3. So we're using the third zoom for boom 1000 index as well. Now on the boom 1000, it's when the price get to the level of 90, when the MFI price. Okay, now this is the money flow index. When the money flow index, okay, this is the money when it flows above the level of 90, or when it touches or reaches the level of 90, okay, of the MFI, after a spike is a sell entry. Okay, is a sell entry. We're not taking a buy on the boom 1000 index. Okay, we only took a buy on crash 1000 index at the level of 90, at the level of 10. So we're not taking a buy on boom 1000 index. It's only for a sell. All right, so when it gets to the level of 90 after the spike, okay, after the spike, you take a sell for 5 candlesticks. You take a sell. Look at it right here. Look at it. Immediately it crosses here. You see there was a spike. There was a spike before it even crossed. Right here, you take 5 candlesticks. Right here, you see, trace it, guys. Trace it with me. Take a look at this. Trace it to the down. You see, before the spikes, a spike occur immediately. Right here, you take 5 candle off the market. Okay, you take 5 candle. When it touches or crosses, you take a sell entry. It's gonna be a sell. Okay, a sell, and it's not a buy. So if you're taking a buy, it's gonna be like you are, you are trading the spike. You're trading to cash the spike. All right, but right here we're not trading to cash the spike. We're only taking a sell. Okay, so we're counting the profits. Take 5 candle each from the market. So remember, patience is the key. Okay, you don't need to rush into the market. You don't need to be too greedy on the market. All right, you take it step by step. That's how you can make profit from the market. Okay, so always remember, guys, that your lot size depends on how much profit you are going to make on the market. So the lower the lot size, the lower the risk, and the higher the lot size, the more money, but it increases the risk, okay, or the market. Okay, so the lower the lots, the lower the risk, and the higher the lot size, more profit, but the risk is going to be high on the market. Even though you are making profit from the market can still change, meaning that even at the point where you expect the market to buy, it may sell. Okay, so if you have been trading for a while, you should understand this by now. Okay, sometimes the market doesn't always go the way we want it to go. Okay, things may occur, price may change, even though you don't expect price to change at a given point in time. Okay, so I hope you understand what I just said to you guys. So guys, I believe after watching this video, you now have a better understanding on how to trade boom and crash 1000 index using the money flow index strategy. Alright, so if you find value in this video and you really enjoyed watching this video, then do well to like and subscribe to this channel, the Daily Forex. I'll see you guys on the next video. Peace.